Look, I need to be straight with you about something that's happening in the silver market right now. And I'm not talking about some theoretical scenario that might play out over the next decade. I'm talking about a situation that's unfolding as we speak, and most people have absolutely no idea it's happening. You see, while everyone's been obsessing over Bitcoin hitting new highs and the stock market doing its thing, something extraordinary has been building in the silver market. And when I say extraordinary, I mean the kind of setup that only comes around once or twice in a generation. The kind of setup that, if you miss it, you'll be kicking yourself for years. Let me paint you a picture of what's really going on here. Right now, silver is trading around $28 to $30 an ounce. That's what you see on the screen. That's what the mainstream financial media reports. But here's what they're not telling you. That price? It's completely disconnected from reality. It's like watching a pressure cooker with the gauge buried in the red zone, and everyone's just walking by like nothing's wrong. The physical silver market is in a state of stress that I haven't seen in my entire career. We're talking about a situation where the people who actually need physical silver, the industrial users, the manufacturers, they're scrambling. They're paying premiums of $4, $5, sometimes $6 over spot just to get their hands on actual metal. Think about that for a second. If silver is supposedly trading at $28, why would someone pay $33 or $34 for it? Because they can't get it any other way. I was talking to a dealer in Texas last week, guy who's been in this business for 30 years. He told me something that should send chills down your spine. He said, "I've got customers with money in hand, ready to buy, and I can't get them product. The wholesalers are out, the mints are backed up for months, and the stuff I can get? The premiums are insane." This is happening while the paper price, the price you see on your screen, is barely moving. How is that possible? How can there be a massive shortage of physical silver while the price stays relatively calm? Well, that's where things get really interesting. You've got to understand how the silver market actually works. Most of what trades isn't real silver. It's paper contracts, futures contracts on the COMEX, unallocated accounts at the LBMA in London. These are essentially IOUs for silver. And here's the kicker. There's way more paper silver trading than there is actual physical silver in existence. We're talking about a ratio that some estimates put at over 100 to 1. For every ounce of real silver, there are 100 paper claims on it. Now, this system works fine as long as everyone plays along, as long as most people are happy to trade paper and never ask for delivery. But what happens when that changes? What happens when people start saying, "You know what? I don't want your IOU. I want the actual metal"? That's exactly what's starting to happen right now. Look at what the central banks are doing. Not with silver specifically, but with precious metals in general. They're accumulating gold at a pace we haven't seen since the 1970s. The Chinese central bank, the Russian central bank, the Indians, the Turks, they're all buying. And why? Because they see what's coming. They understand that the current monetary system, this experiment with unlimited money printing and zero interest rates, it's not sustainable. And here's where silver comes into the picture. Silver has always been gold's little brother. It moves in the same direction, but with much more volatility. When gold goes up 10%, silver might go up 20 or 30%. When gold goes down 10%, silver can drop 20 or 30%. It's a leveraged play on the same fundamental forces that drive gold. But silver has something gold doesn't have: industrial demand. Massive, growing, irreplaceable industrial demand. Think about the green energy transition that every government in the world is pushing. Solar panels. Every single solar panel requires silver. It's the most conductive, most reflective metal we have. There's no substitute that works as well. And we're not talking about a little bit of silver. A typical solar panel uses about 20 grams of silver. Doesn't sound like much, right? But when you're talking about installing hundreds of millions of solar panels, that adds up fast. The Silver Institute estimates that solar panel demand alone will consume over 140 million ounces of silver this year. That's up from about 80 million ounces just 5 years ago. And it's projected to keep growing. Some analysts think solar could be consuming 200 million ounces annually by the end of the decade. Then you've got electric vehicles. Every EV uses significantly more silver than a traditional car. We're talking about an ounce or more per vehicle, compared to maybe half an ounce in a regular car. And the world is mandating a transition to EVs. California says no more gas cars by 2035. The EU has similar targets. China is pushing hard into EVs. That's millions and millions of additional ounces of silver demand coming online. 5G infrastructure. Each 5G base station uses significantly more silver than 4G, and we're building out 5G networks across the entire planet. Medical applications, electronics. Silver is everywhere in modern technology, and the demand is accelerating. Here's the problem. Silver supply isn't keeping up. In fact, it can't keep up. Most silver doesn't come from primary silver mines. About 70% of silver production is a byproduct of mining other metals, mainly copper, lead, and zinc. So silver supply is largely dependent on the economics of those other metals. If copper prices are low, mines shut down, and silver production drops as a side effect. You can't just turn on more silver supply when you need it, and we've been running a supply deficit for years now. The world is consuming more silver than it's producing. The gap is being filled by above-ground inventories, existing stockpiles. But those stockpiles are finite. They're being drawn down, and at some point, they run out. The COMEX warehouses, where the futures contracts are supposedly backed by physical metal, they've seen their inventories drop significantly over the past few years. We're talking about a decline from over 400 million ounces to under 300 million ounces. That's a massive drawdown. And it's happening while industrial demand is surging. Now let me tell you a story that illustrates just how precarious this situation is. Back in 2021, there was this movement on Reddit. You might have heard about it. Wall Street Bets and some other forums, they decided to try to squeeze the silver market. They encouraged people to buy physical silver and shares of the silver ETF, SLV. The idea was to expose the paper manipulation and force the price higher. What happened next was remarkable. Within days, physical silver disappeared from the market. Dealers were cleaned out. The US Mint had to ration silver eagles. Premiums exploded. And this was from a relatively small amount of retail buying. We're not talking about billions of dollars. We're talking about maybe a few $100 million of demand, and it nearly broke the physical market. The price did spike, briefly, but then it was pushed back down through massive paper selling on the COMEX. Hundreds of millions of ounces of paper silver were dumped on the market in a matter of hours. Not real silver, paper contracts. And that was enough to cap the price and kill the momentum. But here's what that episode revealed. The physical market is incredibly tight. It doesn't take much to overwhelm it. And the paper market is the only thing keeping a lid on the price. So what happens when that paper market loses credibility? What happens when enough people decide they want physical metal instead of paper promises? You get a short squeeze of epic proportions. And I'm not being hyperbolic here. The setup in silver right now is arguably more extreme than it was in 2021. The inventories are lower. The industrial demand is higher. The supply deficit is larger, and the amount of paper silver relative to physical silver is just as absurd. There are major banks and institutions that are short silver. They've sold contracts promising to deliver silver they don't have, betting that the price will go down or stay flat. If the price starts rising and they're forced to cover those shorts by actually buying silver, it creates a feedback loop. Buying pushes the price higher, which forces more short covering, which pushes the price even higher. We saw this play out in nickel in 2022. The London Metal Exchange had to halt trading and cancel trades because a short squeeze got so out of control that it threatened to bankrupt major participants. The price of nickel went from $20,000 a ton to over $100,000 a ton in a matter of days. They literally had to stop the market and rewrite the rules to prevent a complete meltdown. Silver has the potential for something similar. Maybe not a 5x move in a week, but a doubling or tripling of the price in a relatively short period? Absolutely possible. And if the physical shortage gets severe enough, if industrial users start panicking about securing supply, you could see premiums explode even if the paper price doesn't immediately follow. Imagine silver at $30 on the COMEX, but you can't actually buy physical silver for less than $50. That's not a theoretical scenario. That's the kind of dislocation that happens when paper markets break down. Now, I want to take a quick detour here because this is relevant to a lot of people watching. If you're sitting on $100,000 or more in retirement accounts, traditional IRAs, 401ks, that kind of thing, you might want to look into how gold IRAs work. I put together a free guide. It's in the description below. It covers how you can get physical precious metals into your retirement account without triggering taxes or penalties. It's worth checking out if you're thinking about protecting some of your wealth with real assets. All right, back to where this is all heading. The geopolitical situation is adding fuel to this fire. You've got the BRICS nations, Brazil, Russia, India, China, South Africa, and now they're expanding to include more countries. They're actively working to reduce their dependence on the US dollar. They're talking about creating alternative payment systems, settling trade in their own currencies, backing those currencies with commodities and precious metals. Russia and China have been accumulating gold for years. They're not doing that for fun. They're doing it because they see a future where the dollar's dominance is challenged, and they want to be positioned for that. And if gold is part of that equation, silver comes along for the ride. The U.S. national debt just crossed $35 trillion. The deficit is running at close to $2 trillion a year. The Federal Reserve's balance sheet, even after some reduction, is still massive. We're in a situation where the only way out is to inflate, to print more money and devalue the currency. That's not a conspiracy theory, that's just math. And when currencies devalue, hard assets go up. Real estate, commodities, precious metals. Silver is one of the most undervalued hard assets out there right now. It's still trading below its all-time high from 1980. Adjusted for inflation, silver would need to be over $150 an ounce to match that peak. Think about that. We're talking about a potential 5x move just to get back to previous highs in real terms. But let's bring this back to the immediate situation. The technical setup in silver right now is extremely bullish. It's been consolidating in a range for months, building energy. The longer a consolidation lasts, the more powerful the eventual breakout tends to be. And we're seeing signs that breakout might be imminent. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been coming down. It peaked at over 100 to 1 during the COVID crash in 2020. It's now in the 70s. Historically, when this ratio gets back down to the 50s or 40s, that's when silver really starts to outperform. And if we see a major precious metals bull market, that ratio could compress all the way back to the 20s or 30s, which is where it's been during previous silver manias. If gold goes to $3,000 an ounce, which a lot of analysts think is very possible in the next year or two, and the gold-to-silver ratio goes to 50, that puts silver at $60. If the ratio goes to 40, that's $75 silver. And if we get a real mania, the kind we saw in 1980 or 2011, all bets are off. We could see triple-digit silver. I know that sounds crazy to people who are used to seeing silver bounce around between $20 and $30. But markets don't move in straight lines, and they don't respect what seems reasonable. They're driven by supply and demand, by fear and greed, by momentum and positioning. And right now, all of those factors are lining up in silver's favor. The smart money is already positioning. You can see it in the ETF flows. You can see it in the futures positioning. You can see it in the premiums on physical metal. The people who understand markets, who have access to information and resources, they're accumulating silver. Quietly, without fanfare. And that's the thing about these opportunities. By the time everyone knows about them, by the time it's on the front page of the Wall Street Journal and your neighbor is talking about it, it's too late. The big move has already happened. You're buying at the top, not the bottom. Right now, we're still early. Silver is still cheap. It's still unloved. Most people aren't paying attention to it. And that's exactly when you want to be buying. Think about the people who bought Bitcoin at $1,000 when everyone said it was a scam. Think about the people who bought real estate in 2009 when everyone was terrified of another crash. Think about the people who bought stocks in March 2020 when the world was shutting down. Those people made life-changing returns because they had the courage to act when others were paralyzed by fear or indifference. Silver is at that kind of inflection point right now. The fundamentals are screaming that something big is coming. The supply-demand imbalance is real. The industrial demand is accelerating. The monetary backdrop is favorable. The geopolitical situation is supportive. The technical setup is bullish. Everything is aligning. But here's the thing. You can't wait for confirmation. You can't wait for silver to be at $50 before you decide it's a good idea. Because at that point, you've missed half the move. Maybe more. The time to position yourself is when it's uncomfortable, when it feels like nothing's happening, when everyone else is ignoring it. That's right now. And I'm not saying you should bet the farm on silver. I'm not saying you should go all in and ignore everything else. But if you don't have any exposure to silver, if you don't have at least a small position in physical metal or mining stocks or a silver ETF, you're making a mistake. You're ignoring a massive opportunity that's sitting right in front of you. Let me give you another historical parallel that might help put this in perspective. In the 1970s, we had a similar setup. Inflation was raging. The dollar was losing value. Trust in the government and the financial system was eroding, and precious metals went on an incredible run. Gold went from $35 an ounce in 1971, when Nixon closed the gold window, to over $800 by 1980. That's a 23x return in less than a decade. But silver did even better. Silver went from around $1.50 in 1971 to $50 in 1980. That's a 33x return. People who had the foresight to buy silver in the early 70s, when it was cheap and nobody cared about it, they made fortunes. Now, I'm not saying we're going to see a 33x return from current levels. The market is different now. There's more paper trading, more sophisticated participants, more ways to suppress price movements. But even a fraction of that kind of move would be life-changing for most people. If silver goes from $30 to $150, that's a 5x return. If it goes to $200, which some of the more bullish analysts think is possible in a real mania, that's almost a 7x return. Show me another asset that has that kind of upside potential with a reasonable probability of actually happening. You can't. Not with the risk-reward profile that silver offers right now. And here's the beautiful thing about silver. It's not some speculative tech stock that could go to zero. It's not a cryptocurrency that depends on continued adoption and regulatory approval. It's a physical metal that's been valued for thousands of years. It has intrinsic worth. It has industrial uses. It's not going away. The downside is limited. Silver could go back to $20, maybe even $15 if we get a major deflationary shock. But the upside? The upside is multiples of the current price. That's an asymmetric bet. That's the kind of opportunity you want to take when it presents itself. Now let me address the elephant in the room. Some of you are thinking, if this is such a great opportunity, why isn't everyone doing it? Why isn't silver already at $100? Great question. And the answer is actually pretty simple. Most people are terrible at investing. They chase performance. They buy what's already gone up. They sell what's going down. They follow the crowd. They listen to the mainstream financial media, which is usually wrong at major turning points. The people who make real money in markets are the ones who think independently, who do their own research, who have the courage to go against the consensus when the evidence supports it. And right now, the consensus is ignoring silver, which means the opportunity is still there for those who are paying attention. There's also the fact that the powers that be, the central banks, the big commercial banks, they have an interest in keeping precious metals prices suppressed. High gold and silver prices are a vote of no confidence in fiat currencies. They're a signal that something is wrong with the monetary system. So there's active intervention in these markets. We know this. It's been documented. There have been fines and settlements related to precious metals manipulation. But here's the thing about manipulation. It can only work for so long. Eventually, the fundamentals overwhelm the manipulation. Eventually, the physical market asserts itself. And when that happens, the price moves violently. We're approaching that point with silver. The gap between the paper price and the physical reality is getting too wide. The inventories are getting too low. The industrial demand is getting too strong. Something has to give. And when it does, you want to be on the right side of that move. So what should you actually do? How should you position yourself for this? Well, the most straightforward approach is to buy physical silver. Coins, bars, whatever you prefer. Yes, you'll pay a premium over spot. Yes, you'll have to store it somewhere safe. But you'll own real metal that can't be printed or created out of thin air. That has value. If you don't want to deal with physical metal, you can buy shares of a silver ETF like SLV or PSLV. These give you exposure to silver prices without the hassle of storage. Just be aware that with SLV, you don't actually own the silver. You own shares in a trust that owns silver. With PSLV, you can actually redeem shares for physical metal if you have enough shares, which makes it a bit more robust. Another option is silver mining stocks. These are leveraged plays on the silver price. When silver goes up, mining stocks tend to go up even more because their profit margins expand dramatically. But they're also more volatile and come with company-specific risks. If you go this route, consider a diversified basket of miners rather than betting on a single company. There are also silver streaming companies like Wheaton Precious Metals. These companies provide upfront capital to mining companies in exchange for the right to buy silver at a fixed, below-market price. They have great margins and less operational risk than actual miners. The point is, there are multiple ways to get exposure. Pick the one that fits your situation and risk tolerance. But do something. Don't just sit on the sidelines and watch this opportunity pass you by. Because here's what's going to happen if you ignore silver right now. 6 months from now, a year from now, whenever this thing finally breaks out and silver is trading at $50 or $60 or $70, you're going to see it on the news. You're going to see articles about the silver shortage. You're going to hear people talking about how they made money on silver. And you're going to think, I knew about this. I saw this coming. Why didn't I do anything? Don't be that person. Don't let fear or inertia or skepticism keep you from taking action when the evidence is this clear. The silver market is setting up for a major move. The fundamentals are undeniable. The technical setup is bullish. The risk-reward is extremely favorable. And the window of opportunity is still open, but it won't stay open forever. This is one of those rare moments in markets where everything aligns, where you can see what's coming before it happens, where you have the chance to position yourself ahead of the crowd. The question is, are you going to take advantage of it? Or are you going to look back a year from now and wish you had? The choice is yours. But if you're ignoring silver right now, you're making a huge mistake. Don't say you weren't warned.